Hi folks, this is Lee. We're going to discuss the monthly support and resistance for the month of October 2023. And the chart in this presentation come to us from the Trade Navigator software that I stare at on a regular basis. And this is a monthly chart of the SPY, that is the ETF that tracks the S&P 500. We use it as a proxy for the overall market, even though, as I often say, it's really not. The NASDAQ, the Russell, the Dow, they can all move in different directions. They don't always follow the S&P, but it is the 500 biggest stocks on the New York Exchange, so it's a pretty good thing to look at. So this is a monthly chart, and these red lines you're staring at are just simple moving averages. The upper one is a 3-period moving average of the highs. Just add the 3 highs up and divide by 3. Nothing complicated, no VWAP, no exponential weighted, nothing like that. Just a simple moving average. Same thing on the lows. The other one is a 3-period moving average of the lows. And we take those and just displace it forward 1 bar in time. And I say bar instead of month because I use the same thing on virtually any charts, including intraday timeframes. And the only reason for that is because now it's static. They're not going to move as this bar uh, unfolds. We know what they are for the month. And we start with the basic premise that the upper band will be resistance and the lower band will be support. However, you can see that really can't be the case here this month. They closed below the lower band last month and opened below it again this month. So that can't very well be support. And the big concern is it could be resistance. My philosophy is the market is sort of like an old hound dog that likes to go back and sniff and see what it did. And that previous support can become resistance and vice versa. And so if they can hold this as resistance, things could get really ugly. I'm not predicting that, but could be. That lower band is, let's call it 430. It's in the 430 area. It could be 431, but roughly 430 in the SPY. And the upper band, if we should get frisky and start rallying, is up around 456. That would be a very welcome sign if they could get up there, I think. The problem, obviously, is we are below that lower band, and so just how low could they go? Well, the unfortunate answer to that is absolute zero. They could get crucified. However, there are some things for us to look at here. I think the first thing is this previous swing high back here at around 418. That's not a whole lot below where they are currently, and that could possibly come in as support. The previous one behind that is at 410, and both of those have reasons to believe they could hold. I wouldn't predict either of them as, oh, this support is so good it has to hold. Nah, I don't think that about either of them, but they are the areas to look at. And I'll mention to you that the low for 2022 and the low for this entire move has occurred on October 13th of 2022. We aren't very many days away from October 13th of 2023. Could it be that easy? Could they just bottom a year later? Well, to be honest with you, there does tend to be a 1-year cycle in the market. And, we're close enough now. They could bottom at any time. Now, again, I'm not predicting that because as long as we remain below this lower band, they could go lower, and I mean lower with a capital L. But I'm not really anticipating that. That's why I'm looking at 418 and 410 as potential support zones. And, all sorts of things will impact them. We've got monthly employment report due out Friday morning that could change this and have us above this band really quickly, or could have us below 410 really quickly. So we'll just have to see how that works out. But at this point, whether this 430 area holds as resistance is the biggest key for the month. If that does, boy, 418 and 410 may very well not hold. They might get buried pretty good. Now what we have here, this is just to share something extra, this is a 5-period RSI, and the red line is a 13-period exponential moving average of the RSI. And what I find is you sometimes get kissaways when you've got a big move. As you can see, the RSI got above its moving average pretty good. it came back down, and a lot of times they'll kiss that moving average and turn up. That hasn't happened here. However, the RSI did just get back down to 50, and that is another thing that often will create a bounce. So there are reasons to believe that the market could bounce in here. I really don't think the sky is falling, so I'm looking for somewhere in there for them to hold. And I'll be as interested in you as you are in seeing if they can do that and get above that 430 area. So I hope you find this helpful. I hope you're able to make some month trading for yourself this month. And, who knows? Maybe we'll be back next month with some more ideas. Good luck trading, guys.